The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the July 13th magnificent Monday edition of today's Trader's Edge show. Hope everyone out there had a terrific weekend. Let's make sure we do everything we can to have an extraordinary Monday. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I, we make that one little 2x4 shift, it means we can find a gift in every set of circumstance that life is going to throw at us. Today, we're going to take a look at the circumstances of the bulls and the bears, what the buyers and sellers are throwing at us. We'll take a look at all the indices, the ETFs, the commodities, the currencies, and anything that you'd like. All you've got to do is pick up that phone at 877-927-6648. After all, I'm absolutely grateful for your presence here today, and I'm here to serve you. So would love to take your call. This is Magical Monday. Of course, it's none other than Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow up 180 points, trading out at 17,939. S&P, she's up 18 points. She's trading at 2,095. Composites up 65 points at 5,062. Russell's up 11 points at 1,263. The DAX finished up 168 points. The FTSE up 64. Gold is back a buck right now. Silver's flat off 3 pennies. Light sweet crude is flat, trading out at 52.76. Leading the charge here, dollar-wise, the upside, Anacor Pharmaceuticals. Whoa, must be a buyout. That's up 49 bucks. Netflix is up $35. No buyout there. Priceline up 26 bucks. Chipotle on fire, up 14. Amazon up 11. Regeneron up 11 bucks. Google is up 11. To the downside, you've got MPLX Limited Partners, LP down 11 bucks. Maybe it's not Limited Partners, but it's LP. They're spinning the LPs. You've got the volatility index, the long side, that's off 16%. You've got Plexus Corp down 11% off 480. 6D Global Technologies off $4. That's down 34%. Humana is off $3. But where do we begin? Well, you know, I'd be wearing my rally cap, but we had that rally cap out on Friday, did we not? I gave you the numbers that you needed to look at because during 1 to 2, I didn't think. We didn't see the NQ or the ES get above that rally cap number, but it wasn't too far beyond the 2 p.m. time frame when it did. Right, so we had that recycle pattern. It was already giving us the message that the market had found its bottom, as you know. We've been calling for a market bottom, just like we called for market bottom back in October, just like we did back in January, and we were calling for a summertime low to form. That low came in last week through all the jockeying around. Now let's go see what the message of the markets is, and we've got to take a look at a couple of different time frames out here. So I'll give you the shorter term time frame first. That way, this gives you the opportunity to get a feel for what's going on multiple time frame wise out here. Okay, so let's take a look at the 120-minute chart here for the ES Mini, which has completed an A to B equals CD pattern. So we'll go ahead and put these patterns up here one at a time. We had that gap down last night. You know, the last 3 gaps down on Sunday evening, all you had to do was just buy the open. And because price never got during that first 10-minute bar, price never ever ticked below the low of that initial open out there. But that's neither here nor there. If we take a look at the A to B equals CD pattern out here, let's put that up on our screen. The A point is out here. I don't know where I grabbed that one. Let me just go ahead and redo this here. Oh, I guess I probably did grab the right thing, but we'll redo it. It's right down here. I'm going to grab the low from about 4:30 in the afternoon. That was on, well, that's about 4:30 in the afternoon on July 9th. That's your A point. Your B point out here, 2 o'clock in the afternoon. Well, began sometime around between the 2 and 4. That's on July 10th. That was on Friday. And then last night's low after the open. You can see that the 1-to-1 A to B equals CD price projection here, 2,088.50. We hit just beyond that level. That was to be expected. And now we're seeing price just really pull back or move sideways, really move sideways here. And that's so it's completed a pattern. You should not have bought this market at the open. If you were listening to me on Friday last week or Thursday last week, there were opportunities to buy the market then. But today, when the market gapped up, that was not the time to buy it. You've got to now wait for the next retracement. Will another retracement occur? I believe the answer to that is yes. Now, how far back is that retracement going to get to? I don't know. We'll take a look at some different areas to look at. But we know we've got a completed A to B equals CD pattern. So we'll go ahead. And at this stage here during this session from 12 to 2, we've got another, 50 minutes or so. We're getting a bearish reversal signal, small little bearish engulfing candle. So you want to pay attention to that. And just because you start to see a pullback, the move is not over, but we'll go into that. We'll go into those details one at a time here. So expect a pullback, and what you ought to be doing is you ought to be getting your arsenal to load up to buy the market. Just like last week when I said the market was going to bottom. So what you want to do, because you missed out on that move, you want to go ahead and you want to be able to buy the next retracement. Let's go see if we can figure out some possible areas for that to occur. First, we'll turn off our A to B equals CD tool out here. If you want to understand also why price stopped in this area here, let me put up my our horizontal trading range boundary line. Now, when we're taking a look at this is horizontal lines of support and resistance. It is that big dashed line that you want to pay attention to. Because over the last 1,600 bars, in this case here, I'm just trading between 4 a.m. When I say I'm trading, I'm looking at it for trades between 4 a.m. and 5:15 in the afternoon, just really trying to eliminate sideways ranging bars that really don't have a ton of meaning, at least with regard to setting up our horizontal trading range boundary lines. And you'll see at the price point of 2,089, we've actually had 73 points of contact during the last 1,600 bars. It's the largest area of congestion. Think about it like, you probably have a way that you drive to some destination. Maybe it's work. Maybe it's to play golf. Maybe it's where it's here or there between point A and B. And you know that when you take that route, that there's some spot that for whatever reason, there is congestion, there is traffic. The stock charts really work the same way. And we can take a look at those congestion patterns because you see the body of the candle is the essence of price. That's why you and I, we take a look at whether it's the open or close. It doesn't really matter to us. We just need to know where is that congestion pattern. Why? Because when price gets to that area, as it has, it should run into resistance out here, right? You start to slow down. And just like you will make your way through traffic, so will the ES Mini. And when it makes its way through this traffic spot, there's another little gnarly traffic spot at around the 2102 level. That's the second largest area, congestion area, during the last 1,600 bars of congestion. And so price is going to have to make it through that level. In fact, just above that, at the 2098 area, that happens to be a place of congestion on the daily charts. So horizontally, even if the markets can break out of this little resting period here between 2 and 4, and they can. There could be a short covering rally that is going. I don't think we've really seen the short covering rally here yet, but I don't know whether we have or we haven't. It doesn't really matter, right? It's a rally. It's a rally cap phase that we're in. The markets are going to go back to their highs. The markets are going to take out their highs out here. But let's get to that one thing at a time. I want you to understand why price has stalled. We've got two patterns out here that have said, hey, this is where I need to take a rest. And after the last 5-6 days out here, quite frankly, the market needs a little vacation out there. So you want to be looking for that pullback in this vacation in order to be able to buy. We can also take a look at the traffic cops out here. These are the ones that if you run a red light, it's actually a good thing, because in running a red light here means you've gotten above resistance. And that's if you look at our charts and you take a look at their TAS market profiles. I believe on Wednesday, John Logan, Tom O'Brien, they're going to be doing a workshop. You absolutely should attend. You absolutely should get access to John Logan's software out there. If you don't, you've got to ask yourself, why? Why not? There is no reason to not. In this case here, we take a look at these market profiles on a 120-minute time frame. You'll see that price just sliced right through those resistance areas here. There's no reason on a 120-minute time frame to be short this market. Resting point? Absolutely. Should you be looking for a pullback? Absolutely. Are we? And could that first pullback actually be down about 15 points? And the answer to that question is most certainly can. Because if we take a look at old resistance, sometimes that's where you see this little change in polarity out here. And old resistance can become new support. So 2073 would be the first mark for you to take a look at. In fact, if we also just take a look at retracement levels, let's go do that. And we're just going to look at from last night's low to this afternoon's high out here. Our 0.382 retracement of just this last leg, the C to D leg, is 2076. So you got 2076, 2073, very close out there, right? So that would be the first place that you ought to be looking at. Now, look, you'd like to take a look at an intraday pattern, maybe on a 30-minute chart or something else out there to see what's happening as price, and should price, doesn't have to pull back this area, but should have pulled back to that area. Is that a place where you start to add to a position, begin a new position? And if price breaks through that level of resistance, is it all over? Is it curtains? No, of course not. It just means that price is likely to move back into the 2067 area. Now, that's just of this last leg. If we take a look at the A to B equals CD pattern, if we just simply come down to that low out here on July 9th to the high, we will see that the 0.382 retracement level around 2071, that's just a dead cat bounce. Right, that's just coming back to the 0.382 retracement level. So those are the areas, if we take a look at the 120-minute time frame chart, that I would suggest to you that you would be looking at in order to be able to add long positions, whether it's in the sectors, whether it's in individual stocks, whatever it is that you might want to trade. So that's what's going on the short term. Why is it that I'm suggesting that you should be looking to the long side, not the short side? Well, number one, I was suggesting to you all last week, through all the grease fires, through all the China stuff that was going on out there, right? The bulls were breaking the China in the China shop. Of course, what you and I knew was number one, we're still in a bull market. We're still in a rising trend out here, right? We took a look at, I don't have that chart on my screen. If you didn't catch last week's show, go take a look at it. There was a chart that I showed that had the composite, it had the New York Stock Exchange, the S&P, the Dow, showed the trend lines out there, showed that there's been no break in a trend. Price just simply inside the New York Stock Exchange came right back into that trend line, both horizontally and diagonally out there. And I made a Gartley buy pattern. So if you're a person that likes to trade the Gartley buy patterns, how could you ignore, or Gartley sell patterns, how could you humanly possibly ignore the buy pattern that was out there inside of the marketplace? Well, there's reasons too. That's why we have bulls and bears. That's why we have buyers and we have sellers out there. Now, when we get back from this break, we're going to go out to Mike in Pennington, New Jersey, I believe it is, and we're going to take a look at Chipotle. But before we go to this break out here, if we take a look at the summation index, the price oscillators for the New York Stock Exchange, for the composite, for the Dow, they're up at nice bullish territory. In fact, the Dow, man, if it closes strong today, it's going to give you jet propulsion territory. That will be its message. Because the last time that the Dow's price oscillator was up here was back in October 27th, after we made that nice bottom in the middle of October. This is Steve Rhodes with TFNN. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow up 176, S&P up 18. Let's go out to Mike. Mike, thanks for calling. Thanks for holding. How are you this afternoon?
Good, Steve. How are you doing? I'm one of your long-time subscribers, and I've been pretty happy this past year.
Thank you. Glad to hear it. Thank you very much. Always glad to be of service to you.
I never mentioned that I'm an advisor also in over out here near Princeton. And
that's great. That's good. How is business?
Yeah, it's pretty good. We do mostly. I like to focus on retirement distribution plans.
Okay, cool.
That's what I like to focus on, and insurance and things like that. But,
that's great. That's great.
Last month I did pretty well with Chipotle puts. I only got 2 of them. They're very expensive, and now I'm glad I waited to buy puts because now it went up like $50. So
yeah,
and I'm just wondering if they're losing their momentum in their sales, or no matter what their sales are, the market's just going to take them higher. I don't know.
Well, certainly price-wise, they're one of the top 5 to the upside today, up $25 with about $13, I should say, with about 2.5 million shares. Here's what it's doing. Really a couple of things. First, with regard to Chipotle, if we take a look at off of the high Mike, that occurred out here on the trading day of April 21st. At that stage, and then you had the gap down the very next day, because we're into the gap, so we're going to get back to that gap on April 22nd. But from that preceding high out there, it went ahead and made that 7-wave count to the downside, and it did that on the trading day of July 6th. So July 6th, it makes that 7th wave. The next day, it moves up. If we take a look at the TAS market profiles out here, it was also running into a level of support at the 602 area, and then a couple trading days ago closed above that, July 9th. So now you're back. So it made a fairly decent bottom where it can be significant bottoms. In the case of Chipotle, what makes it hard to determine whether that is the case or not is the mere fact that it's going to run into the supply line out here. So logically, traditionally, normally, Chipotle should start to run into trouble at that high, which is 656.99. You're at 653. So you're at a real close stage here where, and looks like the relative strength indicator up around that 70 area. So this ought to begin to stall. But the problem is it's a stall and it's where we start to see another sell-off, or is it just a stall and a pullback here? Yeah, and I don't know the answer to that any more than probably most other folks out here. I would say that in order for Chipotle to say that it's more than just a stall, it needs to close back below probably 623. Maybe a little bit of change out here. Now, if it gets into the gap, this thing could run all the way back up to its highs. When I say its highs, I'm actually referring to the day before it actually broke down back to that April 21st level in the 695 area. So it's got good momentum. Is this going to trade against the market out here? I don't know. It's such a sexy stock.
Yeah, it's a toss-up either way. Yeah.
Yeah, I was just going to put it on a weekly chart for us just to see what Chipotle shows on a weekly chart. So on a weekly chart, if we utilize the TAS market profiles out here, it's above that level of resistance as well, which is 641.96. So maybe, and at that stage, and that was actually set up as a bullish profile. That's kind of interesting. So on the daily, you get to that 7th wave, you get down to the bottom of a box, and you're also getting right into a market profile that's set up from a bullish configuration on the weekly, and you're above that. So anything above that 656 area says you're going to likely go close the gap entirely, maybe trade up to 699.03. Is there something else that you're looking at on here that, because that was just a quick look, that I might have overlooked?
It's just the Boston market thing that went down so much so quickly. I know the restaurant business as well. I know how profit margins are. I know that they've been growing at a tremendous rate the last few years, and that can't continue forever. Nothing grows that fast forever, unless it's a virus. But anyway.
One of the things that it didn't do on this last move down that you might want to take a look at is the breakout from the week that began July 21st, 2014. And there were about 4.9 million shares that traded that week. And so price actually, even during this pullback here, it pulled back with lighter volume into that level. Last week, it was only 3.2 million shares, in essence, going into that 4.8.
Yeah, I noticed the volume was drawing up on the downside. I did notice that.
Yeah. All righty.
Okay, great. Thank you for the analysis. Appreciate it.
Hey, you betcha. Thanks so much for calling, and thanks for your subscribership. That was Mike in Pennington. This is Steve with TFNN. Dow's up 181, S&P's up 18. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow up 182, S&P up 18. So the first segment, we took a look at intraday, what was going on. That way you can get a feel, maybe kind of make some plans here as to what's going to likely take place in the market for the next couple of hours out there. So we accomplished that task. Now let's go take a look at, and then as we were going to that first break, I mentioned the price oscillators all being above zero, especially the Dow. So we want to take a look at, the Dow and the New York Stock Exchange. Let's start off with it because both of them have similar patterns from this standpoint. Let's take a look at the New York Stock Exchange. Let me just do this here. I'll do it just on this page right here. $NYA. And we'll take a look at the daily chart. So here's what we know about the Dow. Give me a moment just to get my other screen up here so I can turn a couple of things off, make it a little bit easier to take a look at. I don't need that rectangle. We don't need those moving averages right now. We don't need the task box. Okay, so here we're good. Okay, so we take a look at what the New York Stock Exchange did. It was a beautiful, beautiful setup out here. If we take a look at the A to B equals CD to the downside off of the high from May 21st, that's your A point. B point down here June 9th. C point out here on June 21st. Price makes more than a 1 to 1.272 A to B equals CD to the downside. Forms a nice little hammer candle right here on July 7th. All 4 indices, all 5 indices. We had the, I don't know if it was all 5. I don't think the Russell 2000 did, but 4 of the indices, New York Stock Exchange, S&P, Composite, Dow, maybe the NDX probably did as well. If the Composite did, all made hammer candles out there. It's only happened 6 other times over the course of the last 25 years. Now we can say that 5 out of 6 have been bottoms, significant bottoms out here. In any event, you make a 1 to 1.272 A to B equals C to the downside. You make a nice little hammer candle. You go down and you test that hammer on July 8th. Nice little bullish engulfing candle on Friday. Remember, this set up a Gartley buy pattern. All Gartley buy patterns have got 5 potential outcomes. As we go take a look at those outcomes, we'll turn that A to B equals CD pattern off out here. Outcome number 1 was hit on Friday. We were on the show and we were saying, look, we're hitting this area with a wide-ranging bar, the 0.382 level. You're going to go to the next area. That says the New York Stock Exchange expect it to go to at least 11,013. At that stage there, that's where it's going to get a little dicey, perhaps. Dicey because in the New York Stock Exchange, you get up to a 0.618 retracement. That can oftentimes mark the beginning of the next wave to the downside, if in fact that happens. We also have to take a look at both sides of the trade out here. But that's why you and I want to go take a look at that summation index and get a feel for what's going on there. And if we take a look at the New York Stock Exchange, it's up to a fairly high level. Earlier in the day, it was really close to this 150 mark. And 150 is the level that we want to be paying attention to. And the reason that we want to be paying attention to is because that's where you get up into, we'll call acceleration range. Now, acceleration range does not mean that you automatically take off from that spot, you go higher, you don't look back. What it means is that the market's going to go to higher highs out there. So that level, right now, you're at a oscillator reading of 106, still very good compared to Friday. But if it gets up in that 150 range, if you go back and you take a look here, just take a look at coming off the highs back here in when this was the October highs, I believe. So back in October, you got up into that nice level above that 150. You started actually making higher highs over the course of a week or two out there, and that just said that you were going to go to higher ground, which it did, because those higher highs inside the oscillator stopped being formed back on October 31st, yet price was able to go to a higher level out there. And that's what happens when you get these initiation, jet propulsion type moves out here. And so we'll watch the oscillator at the same time that we anticipate and expect that the New York Stock Exchange will go close this gap. We'll at least make the second move, the 0.618 retracement of that Gartley buy pattern. And if it gets above 150, it's going to get all the way back to its highs out there. That's just the way that it's worked in the past. And until we get any other information, we should anticipate that that's what it's going to go this time around as well. Let's go out to California to Arnold. Arnold, thanks for calling. Thanks for holding. How are you today?
I'm doing pretty well, Steve. Thanks for being on the air. I think that among all of these great hosts that TFNN has, I do think that you are my favorite.
Oh, well, thank you very much. The check is in the mail.
Thank you very much. Okay. No, and the reason I say that, of course, there's another side to it. Here is, I mean, you are so knowledgeable about all these oscillators and indicators and stochastics and retracements and everything. What I would really appreciate is kind of like a dumbed down version for me, because one week I listen and you think that everything's going to be turning around. It's a possibility. I would like something a little more definite that is an easier indicator that says, based upon everything you're looking at, because I do believe you look at everything, is a simple on the S&P 500 that the market is attractive to buy, like a green light, a red light, or a yellow light. Kind of like, in a sense, I don't know if you follow IBD, Investors Business Daily, where they have confirmed up, a down, and an uptrend under pressure. Something like that we could say, oh, okay, Steve is now reading the market, not to possibly do this or possibly do that, but it's investable. Or,
I think that and I think that's a great suggestion. I think that the best indicator that I could come up with that's going to be what was it? Did you use the term dumbed down or something like that, I think, or a little bit simpler, easier to follow.
Yeah.
I think would just be that trend line, like I've been showing, for the past several weeks, and the New York Stock Exchange. I think when price hit that level and those trend lines, something like I showed last week on Friday, when you took a look at the New York Stock Exchange, the S&P, and so forth, that you could see when price hadn't broken that trend, it's in an uptrend. It just cannot be argued any other way that I see it out there. That price is still in an uptrend. And last week, when when price got down to the support level of the inside the New York Stock Exchange, that was one of your buy points. That was the time to go long. And the reason why it was, Arnold, I would say, is because if price took out the lows, then there was something else that was going on. And the New York Stock Exchange would have said the next buy point was probably 10,380, another 400 points down or something like that. But I mean, if there was one single indicator out there, imagine how easy my life would be.
Well, no, but I'm not saying jettison all your other indicators, but it's like for us sitting in a car. The car is either going forward, it's going in reverse, or it's not going at all. And so it's either buy, hold, or sell for a car. It'd be the same thing. Take all of your diagnostics, because what you just even said, last week we were still probably, or the week before, above the trend line, so you would have been in what I would consider to be an up mode.
No,
So
look, your point is extremely valid. It's why I would say that. Like, I will tell you what I do in my newsletter, and I'll try to pop that up on the screen here for you. The newsletter service each day. This is the front page of the newsletter service, so everybody's going to see what it is that I wrote this morning. So I'll actually go ahead and read it out here. But in the newsletter, what I do for subscribers. So, I'd suggest giving the newsletter a shot. But I have in here what the market posture is, and I use it for the New York Stock Exchange. I report on it every day with regard to its monthly outlook, its weekly outlook, and what's going on a daily basis out there. So I make it very straightforward, and that way it makes it easier for investors with regard to if you're trading long-term money out here, you know that we're still in a bullish trend. In the weekly, the same case out here. And look, what I put in the newsletter here this morning was that futures were up nicely. And here's what we know. The average price movement from high to low for the ES Mini during the last 5 trading sessions has been 38, 48, 37, 30, and 30 points, respectively. And since last night's open, I sent this out at about 8 o'clock in the morning. The ES Mini had moved 36 points. So I said, basically, chances are the energy has already been used up in the market. And that's why we're not going to go ahead and add to our long positions out here. And then I talked about the one position that we looked at on Friday, adding, which was to Soro. And by the time that we could add, it had already taken off. It was up 5% on Friday, and up another 1.5% today. So I do, give that, but that's to subscribers out there. But I try to do everything I can, during the radio show to give you enough information, and your point's well taken.
I appreciate that, Steve. Thank you.
Yeah, no problem. But I would say, just to be real clear, you want to buy the next pullback. All right? Hello, Mike? Arnold, I apologize. Looks like we lost Arnold. Okay. Hey, that was great advice, great input as well. And in any event, so let's go back and take a look at the Dow. I mentioned the Dow out here. With regard to wanting to take a look at its price oscillator, and really the same pattern with regard to going back and take a look at the Gartley buy. So let's take a look at that. And the Gartley pattern out here, H.M. Gartley, if you go take a look at his book, what's the name of it? In any event, if you take a look, he's got a great pattern, and the pattern out there was really about being able to get in on a move that was a large move that you've missed, either to the upside or to the downside out here. And if we go take a look at it, let's go take a look at the Dow out here. Just like the New York Stock Exchange, this also had an A to B equals CD to the downside. And when I say get in on a trend that you've missed out on, I'm really talking about the trend right now coming off that significant low back in October of 2000. 2015. So from that low to the high that was out here back in April, May, I guess the high was May 19th or so. This, you've had a nice clear A to B equals CD down pattern out here. So just like inside the New York Stock Exchange, that A to B equals CD pattern is nothing more than what we like to refer to as the lightning bolt. That lightning bolt here, you had your swing point was on May 20th. That was your A. Your B point, a little doji on June 9th. Retracement up into the level of June 23rd. Nice little hammer candle out there. The market was communicating to you and I. Hammer candle just says it's trying to hammer out a low. We've been talking about how the market's trying to create a summertime low. Hammer out a low, create a summertime low, one and the same. That low wasn't even tested inside the Dow. It was tested inside the New York Stock Exchange. Now, we know that there are 5 outcomes of every Gartley pattern out here, 5 potential outcomes. And just like inside the New York Stock Exchange, if we go from the high, the A point, come on, grab this thing here. If we go from that high out here down to the low, we're going to see that the price is well above the 0.382 retracement level. It says the Dow is going to make it back to 18,016. You're at 17,942. Does it have to do it today? No. Does it have to do it tomorrow? No. Has there been a ton of energy expended over the course of the last 6 trading sessions? Yes. Are we likely to see narrower bars in the upcoming days? More likely than not. But I don't know whether we will or we won't. But more likely than not, the market will start to get back to normal type trading out there. Greece probably starts to subside. But I don't care whether it does or it doesn't. Here's what I want you to know. The Dow is going to make its way up to 18,016. Make that 0.618 retracement level. But more important than that, when we take a look at Stevie's bag of indicators out here, is take a look at what this price oscillator, what it's doing as we speak right now. This is the Dow out here. It's registered, its reading is 2.47. Now, look, we're not going to let just a couple of tenths really screw this up here. But when you get to 2.50, just like when we were taking a look at the 150 level inside the New York Stock Exchange, when you get up into the 2.5 level inside of the Dow, that is called jet propulsion territory. Again, does not mean that it takes place overnight and just marches forward. It can, but doesn't mean that that's what it has to do. Again, you can go back to the last time that we had a reading up here. You know, there's a lot of folks that will say that this move that we've had out here is weak. And I would argue otherwise. I would say, well, hold on a minute here. That's really not the case when you take a look at the advanced decline line, when you take a look at what other pattern behavior is out here. And very rarely does the Dow, forget about the market, does the Dow get up into a 2.50 reading. Now, remember, this reading that you and I are taking a look at, it doesn't mean diddly squat until 4 p.m. today. If the market starts to pull back, this is going to potentially pull back as well. But what I can do is I can tell you what it says at 147. We can go back and say that, man, in October, last time that we were up at these levels, looks like it was on the 24th of October. We know the market continued to move higher. We also had that same type of a reading back here in February of 2014. What did the market do? It went ahead and moved higher. We also had a reading like this back in September of 2013. What did the market do? It went ahead, moved higher. Now, in September 2013, it also went ahead and it pulled back to form what? To form that October low, that normal October low out here. So, but that's just because we were in that kind of seasonality type pattern out here. So we go back here. I'll go back a little bit further for you. Back into July of 2013. Now, I'm only choosing these dates because it's unusual for the oscillator to get up to that reading. When it does get up to this reading here, this 2.5 level, you cannot ignore it. Now, look, here's the deal. I can't guarantee or promise you what the future holds, but what I can do is tell you that we can't ignore what happens when these oscillators get up into these levels here, inside the Dow, inside the New York Stock Exchange. And you probably, if you were listening to the show last week, you know we took a look at the composite. And we saw that it got down to that trampoline impact zone, and that was back on July 8th. And every time it's done that in 2015, inside the NASDAQ composite, prices made higher highs, or it's made it all the way back to its highs out there. And that's what the NASDAQ composite is going to do this time around as well out there. So look, just use stops. That's all you've got to do out there. Buy the next pullback. That's what I would recommend. The Dow right now, she's up 177 points. S&P up 18. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow 175, S&P up about 17 points right now. Now, one of the things that I'm noticing when I take a look at my screen out here, we've got gold trading back $2. Not a big deal. Silver is off 3 pennies. Both the XAU and the HUI are trading just a bit lower out here. But what I noticed is that Rand Gold Resources is trading at 64.69. It's up 53 cents. Gold Fields is up a nickel. not a big deal out there. Freeport-McMoran is up 27 cents. But if you trade Freeport-McMoran, you're really trading the Australian dollar. Go take a look at the correlation between Freeport-McMoran and the Australian dollar, and you will see that it does the Texas two-step all of the time. That's really what you're trading when you take a look at FCX. Now, in the case of Rand Gold, I'm going to give you a free potential trade out here. Potential, because how do I know if a trade is going to work up? When I first popped open the chart here for Rand Gold and saw that it was up, what struck me was the mere fact that today's candle session, now we don't close until 4 o'clock, so I don't know what it's going to really look like. That's okay. You don't have to hop on this right now. But today's candle session, if price closed right here, right now, is actually a key reversal day. What do I mean by that? I mean that yesterday or Fridays, both high and low have been exceeded during today's trading. I also mean that the market is in a extended condition. So that would be either overbought or oversold. If you take a look at a relative strength indicator, that's what we have down there. We can also see that we have a relative strength price divergent. Price makes a lower low, does with less relative weakness, and now you've got what is a piercing candle as we take a look at it right now. It's a bullish reversal signal. Don't know how it's going to end the day, but you've also got a key reversal session. Now, when I take a look at the last key reversal session out here inside of Rand Gold, it happens to be all the way back here on March 11, 2015. Similar type circumstances. Price had gotten to an oversold condition with that relative strength indicator the couple days before that down below the 30 line out there. Now you had a nice big old bullish engulfing candle session, a little bit stronger than the one that we're looking at right here, but nonetheless, Rand Gold Resources is giving you a signal. Now here's where the real trade setup could come in. As we take a look at the ticker symbol, by the way, is GOLD. And if I take a look at either the high here from April 29th, or I go ahead and use the high of May 14th, it really doesn't matter. If I use either one of those highs and I do my wave counts to the downside, guess what today is? Because of the lower low that it made. We're in that seventh wave to the downside. Now, with that specific trade, we could get lower price tomorrow. So today may not be the day. Won't know till tomorrow. Just going to have to wait to see what kind of signal we get. But if today were the day, if tomorrow we don't take out today's low, you've got a seventh wave session, and your stop is right below. I mean, to the penny, 1 penny below the actual stop of today's low out here. I would tell you what that level is. I'll just have to go to my other screen. That's what I'll have to do. That would be a price point so far today of 63.78. So you don't get, normally I would tell you don't, with regard to stop management, money management out there, what you've got to do is you need to make sure you're always aware of your average true range. Because if you average true range is nothing more than normal breathing patterns out here. When you trade a seventh wave, you just are simply one tick below. Now, you use the same money management. You have a tighter stop, and it just means you lose less. So you're not going to lose your entire investment out there. Make sure you utilize proper position sizing out there. And if you don't know what position sizing is, come on over. Try my newsletter service, Mastering Probability. You get a 90-minute workshop that gives you everything you need, and you've got access to the actual position size tool that's on your members page out there. So folks, stay tuned, because our man, the squeezably soft David White, he's going to be up next. Dow's up 174, S&P is up 17. I wonder where he is with his bet with Andy. Somebody's going to be wearing underwear on their head. Have a great day, folks. We'll see you soon.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.